Here's everything you need to know to learn to trade, broke down into easy bite-sized modules and steps. We'll go from the very beginnings right through to reading price action, and hopefully by the end of it you'll be a better trader. This course is for beginners to intermediate. Wherever you are on your trading journey, hopefully you'll find something useful, and I wish you all the best with your trading journey. So let's get into it. Here we go. How to trade Forex, how does Forex work, and what's the best strategy? Step 1. Education. Building your trading foundation. Let's start with the most important piece, education. Before you even start to place a single trade, you need to understand how Forex works, what moves the markets, and how to manage risk. Good news is, you don't need a finance degree or paid course to get started. There are plenty of free beginner courses out there. If you're brand new to trading, start with structured learning. Free courses from places like the Fivers are a fantastic entry point. Their one is video-based, beginner-friendly, and walks you through the basics of trading, psychology, risk management, and strategy. Another must-have is BabyPips, School of Pipsology. This is one of the most respected free resources in the Forex world, quite well known. It's written in plain English and covers everything from currency pairs to pips to advanced strategies and trading plans. It's a great place to start if you're new to Forex. Also worth checking out is Forex.com's educational hub. They offer a wide range of free lessons from beginner to advanced, covering everything from how Forex works to technical and fundamental analysis. Plenty of other prop firms also offer education within their site. For example, Effexify Academy provides a module learning system. Carrying on with the education now, there are great books you can find and read. Books are a timeless way to deepen your understanding. Start with Trading in the Zone with Mark Douglas. I'm sure everyone will recommend this one to you. This book focuses on mindset, which is arguably one of the most important parts of trading, possibly more than technical setup. Other great reads include Market Wizards by Jack Swagger, interviews with top traders. The Disciplined Trader, also by Mark Douglas. Technical Analysis of Financial Markets by John Murphy, a classic for charting and indicators. And if you're short on time, just grab the audiobook versions. Amazon, for example, offers these free trials for Audible, so you can listen whilst exercising or commuting to and from your work. Video learning and YouTube channels. Do you prefer to learn visually? Many people do. Then maybe head over to YouTube. YouTube is packed with plenty of free educational content, possibly too much, so you need to pick and choose the right ones for you. A couple of examples here at S&B Capital. They offer plenty of trading psychology and strategy. You got Ray Nateo, beginner-friendly technical analysis, Trading Nut, interviews and insights with real traders. But have a look through, you'll find plenty of creators out there, including myself. These creators break down complex topics into digestible lessons, and many of them offer free playlists for beginners. Other places you might wish to check is podcasts for traders. If you're more of a listener, try podcasts like Chat with Traders, interviews with professional traders. Desire to Trade is another well-known one. And the Traders Podcast, Mindset and Market Insights. You can learn whilst walking, driving, or even cooking. Turn downtime into a learning time. And don't forget the professional articles and blogs as well. Don't underestimate the content of the written word. Sites like Investopedia, Daily Effects, and blogs from sites, for example, FTMO, the Fivers, offer deeper dives into strategies, psychology, and market analysis. Bookmark a few and make a habit to read one article a day maybe. Here's a learning tip. Mix and match your learning formats. There's no reason just to stick to one. Do a bit of everything and see what suits you best. Watch a video, read a blog, listen to a podcast, take notes, either mentally or written down on paper or notepad. The more angles you approach trading from, the faster you'll build confidence and clarity. There's no right or wrong when it comes to learning to trade, so just absorb as much as you can. Go everywhere, learn everything you can, more the merrier. You'll soon build an education and some confidence in yourself. Let's talk about something that separates the amateurs from the professionals, risk management. You can have the best strategy in the entire world, but if you're risking too much on each trade, you won't last long. That's why calculators and risk tools are essential, and the best part is you can access them for free. Start with lot size calculators. There are plenty around. These tools help you determine how much volume to trade based on your account size, the risk percentage, and the stop loss distance. It's simple maths, but critical for survival long term. BabyPips offers a clean web-based calculator that's perfect for beginners. Personally, because I trade on MT5 quite a lot, I use one from Forex. It's a downloadable version and you install it on your MT5 and you place your trades directly through that. So it does all the calculations for you. It integrates seamlessly into MT5 and sits directly on your charts. But there are plenty of web-based ones you can look at as well, and even ones you can put on your phone. risk per trade calculators. So beyond lot size, you want to calculate your risk per trade. This means deciding how much your account you're willing to lose if a trade goes wrong. You don't want to be risking too much here. You'll see a lot of figures bounced around of maximum 1%, maybe 2% per trade. Personally, I think that's a bit high, but that's because my risk tolerance is quite low. And it does depend on the individual trader and what you're trading. For example, if you're trading a prop firm challenge, then yes, you might want to do a higher percentage risk to try and get through the challenge quicker. Once funded, maybe lower the percentage risk down. But certainly every single trade you enter, you should know exactly how much in cash you are risking per trade. You shouldn't be trading, for example, just one lot per trade, unless you know the distance of your stop loss is always going to be the same each time, because then you don't know how much you're risking per trade. It's okay if your stop loss is always, for example, 10 pips and you risk one lot, but it's not okay if your stop loss is going to be anywhere from 5 pips through to 50 pips and you're risking one lot for every trade, because then your risk management is all kaput. You don't know how much you're risking per trade. So you need to alter your lot size based on your stop loss distance to calculate the total risk per trade that you're willing to risk. For example, on a 100k account, if you're risking 0.5% per trade, that's $500 per trade. So you want the total risk from your entry point to your stop loss to total $500. This should be consistent on every trade. So if you look through your trading history, any full stop losses should be a maximum of your $500 here. You shouldn't be finding any trades which went to $800 or $1,000 or $1,500. You will find them less than 500 where you pulled stop losses or closed trades earlier, but never more than your maximum risk per trade that you've pre-decided before you even enter any trades. Some platforms like MyFXBook and TradingView also offer built-in risk tools or scripts that you can add to your charts. If you trade multiple instruments like Forex, indices, commodities, you'll need a position size calculator, again like the ones we mentioned previously from Forex. This helps you normalize your risk across different assets, so you're not accidentally overexposing on one trade. Web tools, again, are useful here, like FX Street's calculator or Owanda's position size tool are great for this. Risk management isn't just about losing losses, it's about staying in the game long enough to win. Using calculators helps you trade with confidence, avoid blowing your account, stay emotionally neutral, and build consistency over time. Pro tip, always set your risk rules before you trade. Don't eyeball it. Use a calculator, lock in your numbers, stick to your plan, no matter what the market throws at you. Trading software and apps, your free trading toolkits. So now let's talk about the tools you actually use to trade. You don't need expensive platforms or premium subscriptions to get started. There are powerful, free trading software and apps available that give you everything you need, from charting and analysis to order execution and mobile access. Desktop trading platforms. Let's start with your main trading platforms. Most brokers give access to MT4, MT5, both for free, lightweight and packed with features. Although a bit dated these days, you can analyze charts, place trades, set alerts, and even install custom indicators and expert advisors, EAs. MT5 being a newer version compared to MT4, but both are still widely used. Another excellent option that many more prop firms are using these days is CTrader. It's a sleek modern platform known for its intuitive interface, advanced charting tools, and fast execution. It also includes built-in risk management tools, a powerful scripting language called Calgo for automation. I think the best visual software for analyzing your trade setups has still got to go to TradingView. In my opinion, a fantastic option, and you can run the free version perfectly well without any problems. Its free version gives you access to real-time charts, dozens of indicators, and the ability to save layouts and set alerts. And yes, there are paid versions which offer you more perks, but you don't have to pay for it if you don't want to. When it comes to mobile trading apps, most of the main ones we've just discussed also have a mobile version. I found most of them to be okay. So if you want to trade on the go, there's several free mobile apps that let you monitor the markets, analyze charts, and even place trades directly from your phone. You have the MetaTrader Mobile MT5, where you can trade directly on your phone, place your trades, set your stop loss, etc., etc. And to be honest, with the recent updates, it works quite well. If you're just analyzing charts on the go, you can use the TradingView app, perfectly acceptable and works great. For news and economic events, you have places like investing.com, great for news, economic calendars, and price tracking. Forex.com app is clean and beginner friendly also. The CTrader mobile app is okay as well for placing trades, analysing your trades you're already in, and keeping track of your trades whilst you're out and about. These apps are all free to download and give you the flexibility to either trade or analyse your trade or keep up to date with your existing trades anywhere, anytime. Custom tools and add-ons. Many platforms allow you to install custom scripts, indicators and plugins. For example, MT5, CTrader, and TradingView. If you're into programming, you can program your own indicators on all of these platforms as well. I know I've tried this and I quite enjoy it. With each of these platforms, you can add things like risk calculators, trade management panels, custom indicators, and automated strategies, or even program your own. For example, with TradingView, you can use a language called PineScript and program your own indicators based on your own strategy. I've done many of these in the past and they all work great. Although PineScript can be a little bit tedious, once you get to grips with it, it's fine. Talking of TradingView has a massive library of community-built indicators which you can add just with one click. The pro tip, don't get overwhelmed by the features. Start simple, one platform, one app, one chart layout. Master the basics before you start layering on complexity to these charts, and always test new tools in demo before you run them live. Following market news to stay ahead of the curve, let's talk about something that catches a lot of traders off guard: market moving news. Economic events, central bank decisions, and geopolitical headlines can cause massive volatility. If you're not aware of what's happening, you could enter a trade before a major announcement and get wiped out in seconds. Not to mention, you might be breaking your prop firm trading rules if you enter a couple minutes before, a couple minutes after a major news event, a scheduled one that is. That's why following market news is essential. And yes, again, you can do it for free. Economic calendars. Start your day by checking an economic calendar. The one on ForexFactory is one of the best. It's the one I use. It's free. I check it every morning. It's easy to read and shows you what events are coming up. So head over to their site, have a quick look. It'll tell you when the news is for each currency pair and how impactful they might be with a color-coded system, where red folded news would be more important compared to the amber-colored folders. You'll see things like interest rate decisions, non-farm payroll, NFP, inflation reports, CPI, GDP releases, and central bank speeches all appearing on there. Each event is color-coded by expected impacts, so you know what to watch out for. There are plenty of other great calendars out there. You have investing.com, economic calendar, Daily Effects Calendar, My FX Book Calendar, plenty to choose from. When it comes to the broader news, you have all the ones you'd expect, like Bloomberg, CNBC, and Yahoo Finance. You can follow these on social media, subscribe to newsletters, or use their mobile apps to get alerts. News apps and alerts. If you want real-time updates, download apps like investing.com. This includes news, calendars, and price alerts. You have Bloomberg Mobile, CNBC app, customizable alerts and TV snippets, and Yahoo Finance app, clean interface and solid coverage there. Set alerts for major currencies, indices, or economic events so you're never caught off guard. Why news matters? News drives sentiment. Sentiment drives prices. Even if you're a technical trader, ignoring news is risky. A surprise rate hike or inflation spike can invalidate your setup instantly. By staying informed, you'll avoid trading into high volatility events, understand why the market is moving, spot opportunities based on macro trends, and trade with more confidence and context. Pro tip: don't just read the headlines, understand the implications. Ask yourself, how will this affect interest rates, inflation, or risk appetite? That's how pros think, and you can do it too. Step 6. Before you risk a single pound or dollar, you need to practice. That's where virtual accounts, also known as demo accounts, come in. They let you trade in real market conditions using simulated money. You can test your strategies, learn the platform, build confidence without any financial risk. Another way is just to buy one of the cheaper prop firm account challenges with the expectation that you'll probably, more than likely, blow that account. So just buy a little one to start off with. Don't go buying a 100k account on your first challenge. Buy a small 5k or 10k, something cheap that you can afford to lose. But if you can't, then stick to the demos initially. So why use a demo account? With zero risk, you're not trading real money, so mistakes are learning opportunities and not real losses. You have real market conditions with prices, spreads, and volatility is live, so you get an authentic experience. Platform mastery, so you get to learn how to place orders, set stop losses, and manage your trades without any pressure. You're just learning the platform here, whether it's MT5, C-Trader, or directly on TradingView or anyone else. You get to test your strategy, try out different approaches, and refine your edge before you even go live. There are plenty of brokers offering free demo accounts for you to do this on. Here are just a few of the brokers that offer excellent demo platforms. You have Plus 500, user-friendly interface, great for beginners. Interactive brokers, ideal for more advanced traders with access to multiple asset classes. Forex.com, solid platform, integrated education, analysis. IC Markets is also great as well. And of course, you can even just mark up your charts on things like TradingView and pretend you're trading them in real time and just see how that goes. All these demo accounts are free and you can access them and set them up within minutes. So there's no real reason not to. And again, most of these companies will offer a mobile version. Pro tip, treat your demo account like it's a real account. I know it's easy just to let it run away because there's no real money there, but set realistic starting balance, follow strict risk rules, and journal your trades. This is the only way to build discipline and prepare you mentally for live trading. Step 7. Mentoring and community. Learn from those who've been there already. Now, everyone knows trading can be a lonely place, but it doesn't really have to be. One of the fastest ways to grow as a trader is to surround yourself with people who've already walked the path. That's where mentoring and at very least a community come in. Finding a mentor can be really hard. Everyone, ideally, when they start trading, wants that person one-on-one to show them exactly what to do. Really not that easy to find someone to do this for you. But if you do, a mentor can help you with most common mistakes, can help you refine your strategy, stay accountable, and build confidence faster. You don't need to pay thousands for mentorship. Just start by building your trading circle. Start with connecting with experienced traders on places like LinkedIn, Discord, or even Telegram. Build a little community, a little circle of traders that you know and can message. Learn to talk to other traders just for the sake of talking to other traders. Offer help for them if you can help or guide in any way. Don't expect anything back, and you will find it will come full circle eventually. I actually find myself surrounded by very successful traders and people of all sorts now. I've built this little group of friends and trading colleagues over the years just by offering to help, being nice and just talking, not expecting things back from people, and just generally wanting to help others grow. Avoid the gurus who promise guaranteed profits and sell overpriced courses. Real mentors will be friends that will want to teach you for the sake of teaching you, not people that want to charge you thousands of pounds or dollars to show you something that may or may not work and probably won't be much help to you in the end anyway. Join trading communities. There are plenty of these. Many prop firms have Discord communities. For example, the Fiverr's Discord community is quite active. Pop in there, say hi to people. Join the Discord streams they have. Play an active part in the community. You'll soon make trading friends there. Communities are powerful and give you access to shared insights and trade ideas, give you emotional support during trading conditions, expose you to different strategies and styles. Don't go out there just asking everyone, what's your strategy? Tell me. That won't work. But as you talk to these people, you will pick up on things and learn more and more from them. And hopefully they'll learn from you as well. Remember, you still have plenty to offer, even if you are in your early days of trading. I often found that when I was showing people my strategies and talking to them, I gained a deeper insight into my own strategies by explaining to them how my strategies worked and stuff. And of course, you can get real-time feedback and discussions in the communities as well. It doesn't even have to be trading related. Some of them have chess competitions, which yes, I've entered some of these before. Telegram groups can be a little bit suspect sometimes with all the signals and the like, but there are good ones as well out there. Like Prop Express, you can keep up to date with all the trading news coming out and things like that. And you can chat within each section. And there's no one called Prop Firm Chat, which is literally loads and loads of chats. So pop on those and have a look, as well as the Discord groups. LinkedIn is a good way to build your trading circle as well. I'd say there's less people just spamming around on there. So by joining that, you get to build a circle of people that you would consider quite high up within the trading societies because you're not overwhelmed by thousands and thousands of people. So you're more likely to build a little trading circle within LinkedIn there. Pro tip. Now this one's really important. If you want to get anything out of the community, you have to put into the community. Don't just lurk around. Engage. Ask questions, share your thoughts, and help others when you can. The more you contribute, the more you'll learn. It's a full circle. The more you put in, the more you get out. You might have heard that before. If you're serious about becoming a profitable trader, you'll need a trading journal. It's not optional. It's essential to track your decisions, analyze your performance, and learn from your mistakes. And the best part, you can do all this for free. Why journaling matters? Clarity. You understand why you entered the trade, what went right and what went wrong. You'll have accountability. You'll stop blaming the market and start owning your own decisions. You'll improve. You'll spot patterns in your behavior and strategy that need fixing. Your confidence will gain. You'll trade with more conviction because you've done the work. There are free trading tools and for journaling. You don't need fancy software to journal effectively. There are plenty of free options. For example, you can just use Excel or Google Sheets. Create a simple table of columns of entry, exits, stop-loss results, and notes. Notion's great for organizing screenshots, reflections, trade setups, and a clean, customizable workspace. You can go old school and just use pen and paper, write down your ideas, trade your journals, and record your daily thoughts, maybe in a daily diary. Take screenshots of your charts before and after, and just annotate them in Paint with your reasons for entry. When it comes to a journal, things you might want to record are the time and date, the instrument you were trading, for example, euro, dollar, entry and exit prices, stop loss and take profit levels, the risk-to-reward ratio, the trade result, whether it's a win or loss. This is subjective. You might have a losing trade that you class as a winning entry, so think about that. You have reasons for entry you want to write down in the notes as well. You can put things down like your emotional state before, after, and during. Some things you might learn. The more detail you include, the more valuable your journal will become. Here's a pro tip. Review your journaling weekly. Look for recurring mistakes, missed opportunities, and emotional patterns. Use these insights to refine your strategy and your mindset. You track your trades, you'll track your growth. Just use Excel or Notion or screenshots to record these. Write down in your journal why you entered the trade, what was the reason, what was the pattern, what was the price action, etc. It's all free, it doesn't have to cost you anything, and it's as simple as that. Let's talk about one of the most underrated resources in trading, professional articles and blogs. All videos and courses are great for structured learning. Written content gives you depth, nuance, and timely insights into experienced traders and analysis. And the best part, you can access all this world-class trading knowledge for free. Why articles and blogs matter. Timely insights, you can stay up to date on the market trends, central bank moves, and macroeconomic shifts. You can refine your strategy, learn new techniques, setups, risk models from seasoned professionals. When it comes to your mindset development, reading stories of traders' psychology, discipline, and emotional control, you get diverse perspectives, explore different trading styles, swing, scalp, algorithmic, etc. Top resources to bookmark. Here are some platforms offering high-quality trading content. You have places like Investopedia, which is great for definitions, strategy and breakdowns, and trading concepts. Sites like Daily Effects for market analysis, forecasting and education, articles from professionals and analysis. You have Forex.com blog covers technical setups, news reactions and trading tips. Then it comes to the prop firms. You have FTMO blog, which is focused on mindset, prop firm evaluations and trader interviews. Of course, you have the Fivers blog as well, with practical insights into strategy, psychology and performance. There's a section on TradingView called TradingView Ideas, which is community-driven analysis where people place chart setups from active traders whose platforms publish new content regularly, and many offer newsletters you can subscribe to for free. How to use articles effectively. Set yourself a reading habit. Aim to read one article per day or a few per week. Doesn't have to be one every day. It's quite a lot. Take notes by writing down or screenshots or something similar, and then try and apply what you've learned. Test new ideas on demo accounts or just backtesting on places like TradingView. You can compare perspectives, read multiple takes on the same topic to build a balanced overview for yourself. Here's a pro tip. Don't just read, reflect. Ask yourself, how does this apply to my trading style? The goal isn't to copy, it's to adapt and evolve. And don't forget you can head over to our website, the online prop firm as well, with plenty of blogs and articles that will also help you along the way on your trading journey. Let's talk about one of the most accessible and underrated resources out there, YouTube channels and trading podcasts. These platforms give you direct access to real traders, real strategies, real stories. Top YouTube channels for traders. Now, YouTube is packed full of educational content, but there are a few standout creators worth following. Places like S&B Capital, professional trading firms sharing insights into psychology, setup, and performance. Then you have places like Teo, the beginner-friendly technical analysis and strategy breakdowns. Places like Trading Nut for interviews with traders around the world. For trading channels, clear tutorials on price action, risk management. Places like the Fivers also. Podcasts worth listening to. If you prefer audio learning, you can listen whilst commuting to work or even whilst you're charting. Here's some of the top picks. Chat with traders, deep interviews with professional traders, hedge fund managers, have desire to trade, which is focused on Forex trading and lifestyle freedom. Traders podcast covers mindset, discipline, and emotional side of trading. Trading global markets decoded from Daily Effects, featuring market analysis and expert commentary. Forex Q&A podcast, hosted by No Nonsense Forex, focused on building a robust trading system. Most of these are available on platforms like Spotify, Apple Podcast, and YouTube, etc., etc. How to use these resources effectively. Subscribe to 2 or 3 channels. Pro tip, don't binge. Digest, pick one episode or video per day. Reflect on it. Decide how it fits into your trading plan. Quality beats quantity here. Don't forget the YouTube channels from the trading firms. For example, the Fivers run a great stream every single day, and these are great learning places for you. Technical analysis tools, master your charts, sharpen your edge. Let's dive into the heart of trading. technical analysis. Whether you're a scalper, swing trader, or long-term investor, understanding how to read charts and use indicators is essential. Again, you don't need expensive software to do it. Charting platforms. Start with TradingView. It's one of the most popular charting platforms in the world, and the free version is more than enough for most traders. You'll get real-time charts, dozens of built-in indicators, custom layouts, alerts and watch lists, access to the community, ideas and scripts. Although there is a paid version of TradingView, and I would suggest upgrading to the minimum subscription, the free version is perfectly fine to start with. You can also use things like MT4 or MT5, MetaTrader 5, or CTrader, all of which offer good solid charting tools, though MT5 arguably is a bit dated these days. You can add customizable indicators and expert advisors, EAs, which you can integrate into places like MT5. For example, I use the Earn Forex one on my MT5 setup. Popular indicators. There's some obvious beginner-friendly indicators that work across all platforms. You'll find them in most places. Things like moving averages, MAs, smooth out price action and identify trends for you. Then you have things like the Relative Strength Index, the RSI. This is a good beginner tool as well. You can measure the momentum and spot overbought and oversold conditions, although be careful with this not to rely on it too much. Same again with things like the MACD. You can track the trend, direction, momentum shifts. And things like Bollinger Bands help you visualize volatility, potential breakout zones, support and resistance zones. When it comes to support and resistance zones, you can manually draw them or use some sort of auto-detect levels. Personally, I find it better to manually draw them so you're looking at the chart and learning. All these indicators can help you make sense of price action and build a rule-based strategy. Just be careful not to rely on the indicators too much. Price action candlestick patterns. Don't rely on indicators alone. Learn to read candlestick patterns and price structure. Indicators have their place, but they should not be the only thing you're looking at. Look at the candlestick patterns like pin bars, engulfing candles, doji formations, breakouts and retests. Of course, you've got trend lines and channels. There's so many things to go through here. Price action will give you the context, and the indicators give you confirmation. You can use custom scripts from the community tools on TradingView, or program your own using the PineScript language. There are thousands built-in community indicators to explore with TradingView. And again, you can use the PineScript editor to create your own tools or modify existing ones. On MT5 and CTrader, you can install custom indicators and EAs, expert advisors, to automate parts of your analysis. Pro tip, don't overload your charts. Start with one or two indicators. Learn how they work and how you can use them, and combine them with price action. Clarity beats complexity here. You don't want your charts being a complete mess of lines and angles and all sorts of stuff where you can't even read the price action. You'll find as you develop your trading journey, you'll probably use less and less indicators and rely more and more on just reading the price action of the chart. Indicators only show you what's actually happening in the price action. So in reality, you don't really need them. They're there to help and guide you, not to be as your main resource. Personal goals and objectives. Define your path. Trade with a purpose. Let's wrap up the foundation with something most traders skip. Personal goals and objectives. Trading isn't just about charts and strategies. It's about knowing why you're doing this in the first place. What success looks like for you. This is dependent on each person, so it is very you-based, and how you'll measure your progress. Without clear goals, you'll chase setups, switch strategies, and eventually burn out. With goals, you'll stay focused and motivated and intentional. Define your trading purpose. So define your trading purpose. Ask yourself, why do you want to trade? Is it for the usual reasons, for financial freedom? Was it side income or full-time career? Am I looking to pass a prop firm challenge or grow personal accounts, or a mixture of the two? Your purpose will ultimately shape your strategy and your time commitment and your risk tolerance. Set yourself time-based objectives. Break your journey into phases. For example, here you could have month 1 to 3, learn the basics, test strategies in demo mode. Month 4 to 6 might be refine your edge and journal consistently. Maybe month 7 to 9 is trading prop firms and evaluations with small capitals. Month 10 to 12, optimize your performance, scale and seek mentorship. This will give you structure and helps you track progress over time. Set some financial goals, but be realistic. Instead of aiming to make 10K a month to start with, grow your account by 3 to 5% a month instead. Risk no more than 1% per trade. Try and maintain a win rate above 50%. Limit your drawdown to under 10%. A 10% loss would normally mean you'd lose any prop account anyway. These goals are measurable and achievable and sustainable. Also set psychological goals. Trading is an 80% mindset. Set goals like stay calm after losses. Do you stay calm when you lose a trade? Follow your trading plan without hesitation. Avoid revenge trading. This is a big one. Take breaks when emotionally triggered. You can track these in your journal and celebrate progress. A pro tip is to write down your goals, review them weekly, and maybe adjust them monthly as you progress. Most importantly, make sure they're your goals and not someone else's. Remember, you are trading for yourself, and your goals must be realistic for you. To define your trading purpose, set realistic timeframes and milestones. Focus on your own growth, not the hype. Track your mindset as well as your money, and record your goals in your journal, and you'll be fine. Step 13. So there you have it. It's complete. Your free blueprint for learning how to trade Forex. We've covered everything from education to tools to mindset and strategy. No fluff, no paywalls, just real resources to help you grow as a trader. Whether you're aiming to pass a prop firm challenge, build a personal account, or simply understand how the markets work, hopefully this roadmap gives you everything you need to start strong. Let's have a quick recap of the 12 steps. So in step 1, we looked at education, learning the fundamentals with free courses and books. Step 2 was beginners courses, structured learning from places like BabyPips and the Fivers, Forex.com. Then we had calculators and risk, tools, how to manage your risk like a pro. Step 4 was trading software and apps, free platforms like MT5, CTrader, TradingView. Step 5 was market news, how to stay informed by using places like ForexFactory, Bloomberg, CNBC, etc. Step 6 was virtual accounts, practicing on demo accounts before you even go live. Step 7 was mentoring and community, learning from others from places like LinkedIn, Telegram and Discord, etc. Step 8 was your trading journal, how to track your trades and refine your edge and keep track of your progress. Step 9 was articles and blogs, reading expert insights from places like Daily FX, FTMO and Fexopedia and the Fivers. Step 10 was YouTube and podcasts, learn from real traders anytime. Step 11 was technical analysis and tools, how to master charts and indicators. Step 12 was personal goals and objectives, refine your purpose and measure your progress. Very important these. And that's it. So if this video helped you in any way, drop a comment below. Remember to like and subscribe and share this video with someone who's just starting their trading journey as well. And if you want me to break down any of these steps into more detail, just ask. So thanks for watching and I'll catch you next time. Bye bye.